Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Crypto markets experienced a brutal weekend, with Bitcoin falling below $80,000 amid liquidations exceeding $2.5 billion in 24 hours. Bitcoin currently trades around $78,671, down from October highs above $126,000. Ethereum sits at $2,409, having shed over 50% from August peaks. The weekend sell-off was particularly severe, with Ethereum accounting for nearly half the liquidation volume at $1.1 billion. Over 430,000 traders were forced out of positions, with long positions representing the overwhelming majority. The downturn stems from converging factors. Geopolitical tensions escalated following explosions at Iran's Bandar Abbas port, while the US government entered partial shutdown after Congress failed to pass funding. Weekend liquidity thinned dramatically, creating phantom liquidity, tight spreads masking shallow order books. This caused prices to gap lower rather than decline gradually. President Trump nominated Kevin Warsh as the next Federal Reserve Chair. Warsh is known for hawkish views, creating uncertainty around monetary policy. December inflation data showed producer price index rising to 3.3%, well above expectations of 2.7%. Markets now price only 52 basis points of cuts for all of 2026, with the first reduction delayed until June. On-chain data reveals divergence in investor behavior. Large holders controlling 10,000 Bitcoin or more continue accumulating, with entities holding over 1,000 Bitcoin increasing from 1,207 in October to 1,303 currently. Meanwhile, retail investors holding less than 10 Bitcoin are selling persistently amid fear sentiment that reached the highest levels of 2026. The carnage extended beyond spot markets. A single trader lost $220 million on an Ether position on Hyperliquid. Binance's estimated leverage ratio hit all-time highs of 0.675, even as total open interest declined to $16.4 billion, the lowest since November. India's crypto industry faced disappointment as Finance Minister Nirmala Sitharaman delivered the union budget on February 1st with no mention of cryptocurrency. The 30% flat tax on crypto income and 1% tax deducted at source remain unchanged, despite industry data showing 72% of Indian trading volume occurs on offshore platforms. In enforcement news, a US federal court sentenced Jingliang Su to 46 months in prison for laundering over $36.9 million from a cryptocurrency investment scam that targeted 174 Americans. Despite turbulence, Bitcoin's hash rate dropped 12% since November 11th. A severe US winter storm forced large miners to curtail operations, with daily mining revenue falling from $45 million to $28 million. However, miners profited from demand response programs, with companies like Riot Platforms earning over $2 million in curtailment credits in November alone. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.